Hi everyone, thanks for joining our final webinar in this series on KPIs for Google Play apps and games. My name is Alyssa Perez and I'm on the Developer Business Growth team in Google Play. What my team does is utilize platform data in order to help developers like yourselves find opportunities and grow your business. Prior to joining Google, I worked on many different mobile game products and held various titles from Business Analytics Manager to Economy and Monetization Strategist and Senior Product Manager. And for those of you that attended our last two webinars, we did a high-level overview of the most common metrics for mobile developers and did a deeper dive into the most common metrics associated with acquiring and keeping new users. And if you missed either of those, feel free to check them out on demand at developersonair.withgoogle.com. Now for today's webinar, we're going to do a deeper dive into the monetization metrics, covering both in-app purchases and subscriptions KPIs. And again, this will be a great way to get an overview of the metrics, how they're related, and how they're calculated. And we'll also go into some things that you should consider for each. Now, as we covered in our Medium posts and our previous webinars, this is the metrics tree that we use at Google Play, and it's based around daily revenue. And remember that these metrics don't have to be on a daily level. You can change them to weekly or monthly, depending on your app's most important time frame. But let's quickly recap how to read this tree. Now, every metric has a parent, and if two metrics have the same parent, you're going to multiply them together in order to get the parent value. So for example, daily active users multiplied by average revenue per daily active user gives you your daily revenue. There's only one exception to this rule, and that's when the metric has a dotted line around it. In that case, you're going to sum instead of multiply. So for example, daily active users equates to the sum of new installs and returning users in your app or game. Now in today's webinar, we're going to look at the monetization portion of the tree, which is the right side, focusing on average revenue per daily active users. Now I do want to call out that these metrics that we're covering first are more targeted to the in-app purchase monetization model, especially because it is daily granularity. But the idea and framework across the metrics is the same for other monetization models, and we will cover subscriptions after IAP today so you can see the similarities, and we'll cover a few of the caveats that are different across them. So starting with ARPDAU, or average revenue per daily active users. This is the highest level metric on the tree, and it tells you how well you're monetizing your entire user base. So it's calculated as the total revenue that you've made in a day divided by the unique number of daily active users in the same day. And you can break this down into two child metrics that you would multiply together: daily conversion and your average revenue per paying user. But let's go through each of them. We like to break up the metrics that feed into ARPDAU into two types of monetization metrics. You have your primary monetization metric, which is your buyer conversion rate, which helps you understand how well you're converting your entire user base, and understanding your ability to get users to purchase for the first time, and then turning those first-time buyers into repeat buyers. The secondary monetization metric is average revenue per paying user, or ARPPU. And this is because it's only addressing the users who have paid in your app or game. And this is usually a much smaller percentage of your active user base. So optimizing this metric means you're trying to get a larger amount from a smaller set of users that have been willing to pay. And we like to say that focusing on the primary metric is where you should start. You want to go for breadth. How many users can you reach by creating monetization strategies that speak to the different segments of your entire user base? And you want to do that before you try to optimize how much you're getting out of buyers. We like to use the example of, is it safer to have 100 $1 payers or one $100 buyer? It's likely safer to have that 100 $1 payers, right? And that's because if we lose one, we still have 99 users that we can get revenue out of. However, if you lose that one $100 payer, all of your revenue is gone. So it's really important to focus on breadth and find the right balance between your primary and secondary metrics. But let's cover some of the things to consider to drive each. Starting with our primary monetization metric of daily buyer conversion. Again, this is the unique number of users that made at least one purchase in a day, divided by the unique number of active users you had. Now in this case, you can get your total daily buyer conversion by summing your new buyer conversion rate and your return buyer conversion rate. So both of those values on the bottom, new buyer conversion and repeat buyer conversion, are normalized by your unique daily active users with the numerator summing up to the total unique buyers in a day. Now again, this in our opinion is the first place that you want to start optimizing, going for breadth and trying to convert a large set of your user base. And generally speaking, if you have a good freemium in-app purchase monetization model built into your app or game, you should see a positive correlation between your buyer conversion and your average revenue per daily active users. And that means that the higher the percentage of users that you can convert to a buyer, the higher you can expect your average revenue per daily active user. So with this metric, you have two levers that you can pull in order to drive it: increasing your new buyer conversion and increasing your return buyer conversion. But let's go through some of the considerations for converting users to purchase for the first time. If you have in-app purchases, you may already have some people that have decided to pay. Really try to use the data that you have to understand first purchase behaviors. What's driving them to make that purchase? How long does it take before they make it? And which SKU are they most commonly purchasing? It's really powerful information to help you understand what is going to drive a user to convert for the first time. You can also think about building out introductory offers or starter packs. Now, I'm going to start out with saying there's no one size fits all, so testing and optimization will be occurring regularly with these offers. But really think about which offerings are most valuable and how you can bundle things together in order to increase the perception of value for the opening offer. And maybe users won't convert on that first offer you give them, but if they're still active in your app or game 3, 4, or 5 weeks later, test how long that window is and see if there's an opportunity to resurface the same offer in hopes to convert them down the line as well. Now, one of the most important things that we like to talk about is clear value needs to be understood from the user for every offer that you surface. Whether it's a first-time offer or a repeat offer, every user needs to understand what they're purchasing and why it's useful to them. Therefore, ensuring that you allow users to engage enough time before you're surfacing an offer is really important because they need to understand, what am I doing in this app or game? What do I need in order to progress further or faster or gain access to something? And you really want to make sure that you're not driving this pay to engage style app with your freemium model. The last thing you want to consider is long-tenured non-buyer offers. Now, you probably have a set of users that have been in your app or game for a long amount of time, and they're adding that social value, but not necessarily monetization value. So really think through how you can give them a robust offer that's really valuable in order to get them to purchase at least once, even if it's at a small price point. Because if they're seeing good value in your app or game, they're likely willing and invested enough to make a purchase. And the last thing I want to call out here is price points are very, very important to test. We'll cover this a little bit when we get to average revenue per paying user, but for new buyer conversion, it's especially important to have a variety of offerings available, even outside of your introductory offer or starter pack. You want to make sure you're not pricing out a user by only having, say, a $4, $5, $6 SKU available. Maybe a user's propensity to pay is at $1. And really think about whether there's an opportunity to test this by market, as there are different kind of ability to pay for different markets. Now let's talk about some of the considerations for repeat buyer conversion. We all probably have a set of sales, promotions, content releases, or even events that we're creating or considering to create for our apps or games with our in-app purchase model. And that's because it's a really popular way to drive more buyers, specifically repeat buyers. But for all of your sales and events, it's important to be predictably unpredictable with them. And what I mean by that is if you always have your sale on a Saturday, your users will then understand, I can wait to make a purchase until that Saturday sale is available. So it's important for them to know that something is coming, but not necessarily know what it is, to ensure that you're providing the incentive to purchase even on a day that doesn't have a sale or an event. Some things we like to talk about are maybe running short time daily deals once or twice a week, and that's going to give the opportunity to do a small incremental purchase. Maybe the sale is only available for 2 or 3 hours. If it's at a small price point, it's a small amount of in-app assets, and it's not going to hurt your economy if you have one. You can also think about doing repeat buyer bonuses. So if a user makes a purchase, maybe there's a piggyback offer a few hours or a few days later in order to create the payer purchase cycle that you want to see. The other thing is surfacing relevant offers based on prior purchases. If you have buyers in your app or game, you know what they have purchased at, you know what price point they've purchased at, you know what they were willing to purchase, and maybe even what the driver was. So really use that information to make sure you're surfacing the right offer to the user. If a user normally makes a $5 purchase, it's probably not going to be a great offer to surface a $100 offer to them because they're normally purchasing at a very small price point. So it's also important to understand their need for a purchase. If a user just made a purchase, maybe they have a very large in-app asset wallet size, really think about whether or not it's worth surfacing another offer to them. Are you incentivizing asset hoarding when you do that? So you want to make sure that they have a specific need and a demand to make the purchase so that you see higher conversion on any offers that you do pop up. And finally, churned buyers. We all probably have a set of users that has purchased before and hasn't purchased in an extended period of time. These are users you can target with specialty offers based on what they purchased previously and maybe the length of time that they haven't purchased in. Is it 30 days, 60 days, 90 days, etc.? And trying to surface a meaningful and valuable offer to them in order to get them to purchase again and get back onto that pay or purchase cycle. Now let's shift to our secondary monetization metric, average revenue per paying user. This is the total revenue that you earned in a day divided by the number of unique buyers that you had in the same day. And it's calculated by multiplying the two children metrics, average transaction value, or how much a buyer spends on their transaction, and the average number of transactions a buyer makes. Now, generally speaking here, you would see a negative correlation between buyer conversion and average revenue per paying user if you have a strong in-app purchase monetization model built out. And that means that you would see a higher percentage of users the higher the percentage you see converting, you should expect a lower average revenue per paying user. And that's because you're getting a larger set of users to purchase at a smaller price point. But I do also want to share some of the correlations that we were able to identify across this cluster of metrics in the KPIs tree. So what you're looking at here is average revenue per paying user on the y-axis with average transaction value on the x-axis. And each blue dot is representing a top game on play. Now yes, this is game data, but it is also true for apps as well. And what we can see is that the relationship is largely linear. So if you can get users to pay a larger price per transaction, then your average revenue per paying user will likely go up. And that makes a lot of sense, right? If users are only making a couple of purchases, the price point of each transaction is going to have a much greater impact on the average revenue per paying user. But when we look at the correlation between average revenue per paying user and the average transactions per buyer, that clean linear relationship doesn't exist anymore. So here you have transactions per buyer on the x-axis and average revenue per paying user on the y-axis. In our analysis, we actually couldn't find any equation that maps well to this relationship. And that's because the daily transactions are driven much more by things like your app design, your in-app economy, and in-app asset consumption habits than by anything else. So some things to consider if you do happen to see this kind of chaotic relationship is how many assets are you selling? We see that selling multiple assets for real money can naturally drive higher transactions per buyer as more things are available for real money purchase. So what types of goods are you selling when you are selling them? Are they CapEx or durable goods? Or are they OpEx or consumable goods? We normally see durable economies drive fewer transactions because that purchase can last a longer period of time versus a consumable currency that will need to be replenished regularly. You also want to think about your velocity of money, or how quickly the purchased assets that are entering your in-app economy are being consumed. But more importantly, how can you speed this up by optimizing the content cadence that you have? If you run a large sale, how can you ensure that those assets are consumed by following it up with an engagement event to drive stronger engagement in order for users to sync those in-app assets that they purchased? Really think about what types of offers that you're selling, and are you incentivizing that asset hoarding? I gave the example of giving a $100 offer to a $5 buyer. That $100 offer can last the user an extended period of time and cause them to not have to purchase in the future for, 3 months, 6 months, however long it takes for them to consume 20 times the number of assets that they would normally buy. And finally, engagement is really important. We talked about this in the last webinar, but engagement is key to monetization with in-app purchase models. It should be directly tied to the consumption of any in-app currencies to help drive additional demand for continued purchases. Ultimately, the design of your app and its in-app economy are imperative to driving these metrics. So try to understand any and all purchase behavior